If I had told you, let's say 10 years ago, that there will be new players like PayPal and Alipay and Goldman Sachs getting into consumer lending and SME lending, you would not have believed this. And this is the case. So if I look at being a historian, if I look at it in the context of 10 years, a lot has happened. The data available has exponentially increased, and people are increasingly familiar using digital applications and digital underwriting standards. And digital became a mainstream in credit, especially in lower mid-market and consumer lending underwriting. Some of the consultancy firms like Ernst & Young and Citi as a bank, they predict that digital underwriting will represent 35% of the underwriting in SMEs in the next coming 7 years. These technological solutions became increasingly adopted and increasingly adding value to underwriting standards, risk solutions, reporting standards, and matching assets and liabilities between investors and borrowers. And we have only seen the start, so I expect the biggest change coming in Europe. If I compare where we are if I compare Europe with Asia, we have quite a long way to go. So it will be quite interesting to see how these underwriting standards and how these technological solutions will also be becoming mainstream in the higher segment in the future, in the years to come. Technology is clearly an opportunity, but if I want to be honest, and if I look at other industries, technology always favors largest players. There is a sort of natural consolidation trend towards larger players. And this is actually what I expect to happen also in private debt and in the entire credit market. And why is that? Because these applications are not cheap. Implementation is not cheap. Data is not cheap. So who has the data advantage? Bigger players have the data advantage. Who has the money to buy these best applications and implement it and execute this? Of course, larger players. So I see this as an opportunity, but I think we have to be honest, and we can see the threat for smaller players, because if investors used to higher standards in reporting, in underwriting, they want to see also the same for smaller players, and I'm not sure whether the smaller players have the budget and the execution capacity and the data to use these applications. There are a number of applications in credit underwriting coming from innovative companies, from fintech companies. If I was a small company, I would start to talk to these players. In the article I have written for Super Return, I name a couple of. And I think starting by actually understanding these applications and talk to the developers at these companies and see how they can implement it in a very cost-efficient way in their own core business, which is credit underwriting. I would start there. And second is some applications on the reporting side like Black Mountain are also quite accessible. So implementing those, I think, also is a must for smaller players. And a third, there are a lot of applications developed also by small companies like Delio that offer cost-efficient applications and solutions for smaller players to plug into a bigger platform. So I mentioned these in the article, and I think it's a good start to assess the trends on the market. It takes a lot of time, it takes a lot of efforts, but I really feel that understanding and connecting to the smaller players is a way to go. I always wanted to be a banker. It was always my dream to be in private markets and be a banker. I was a historian by education. And I find it super exciting and interesting to assess risk in the historical context. And often today I see that history repeats itself. So for me, I became a banker by passion and by interest. Must also say that it's not easy for a woman to to progress in a quite male-dominated industry. Trust yourself, believe in yourself, develop yourself every day. No one gets here by smiling and being nice. It's all about developing yourself based on content. And I do feel that leadership is about giving credit to others. It's a teamwork.